Today we had quite a few interesting things occur with regards to the energy space and energy stocks, and we're going to discuss those and how they affect our positions, because if you're following the strategies of this channel, which have been winning since inception, you have a solid weighting in energy stocks. Now, what's the first thing that happened with regards to energy stocks or the energy space more broadly? Well, that's Joe Biden saying we got to plug the holes of methane, both in old wells, new wells, etc. Now, we've got a quite bullish thesis on energy and energy stocks and the continued rise in the price per barrel of oil. And one of the aspects of this thesis is government hostility towards energy companies and oil more broadly. This, in my opinion, shows more hostility towards U.S. producers, is certainly not an incentivizing force to get them to produce more, saying, hey, you guys got to fix your wells and we're going to make you fix your wells and you're probably going to have to pay for that. Yeah, not quite a production-inducing decision. This is no reversal of the ban on federal land drilling. This is no reinstatement of the Keystone XL pipeline. This is go back and fix your wells because your wells suck. And in an environment where energy companies are getting told a whole lot they suck, it's not gonna, make them come down or want to produce more and shoot the price down. And for us, that's good because we expect the supply to remain under the demand curve, which is unusual but currently the case and leading to the price to climb and for the foreseeable future continue to climb. This is not something that I think we've reached the point, $80. Yes, we may consolidate here. There may be some short-term movements, maybe even a short-term cool down, but I don't think that is going to begin a new trend. I think since Joe Biden won the election, since that was called by the media, the price per barrel of oil has risen. And I think this was a lot of hedging on the point of buyers, people who are actual consumers of energy. Of course, it is the lifting of COVID more broadly. Under Trump, we did not see oil go this direction. We saw it largely come down. That was because he was producer friendly. That is not the case with this administration. OPEC, as we have discussed, is very much in line, and that leads to point number 2 of 3 with regards to energy stocks. Joe Biden today, in the meeting overseas to discuss the climate crisis, basically blamed OPEC for the rise in the price of oil. He did not choose to acknowledge U.S. producers. We would not mind that if we would not mind that if U.S. producers could produce. However, because they're not, because Biden, OPEC isn't going to produce either, so prices can just keep going up. They can just relax, chill, and get a ton of money for their black gold, right? Sounds like a pretty good way to live if you've got black gold. So, OPEC had their fastest meeting on record in their most recent meeting and have continued to reiterate and have continued to virtually shun the White House requests that they will not increase production. Is what it is. And finally, because we like Exxon so much over here on this channel and in this portfolio, it is our largest position, we have to address the sell rating that came on Exxon today. Of course. Why wouldn't we not do that? We're going to do that. I question the thoroughness of this analyst's picture of Exxon. They highlight the fact that Exxon is trading at a 10% premium to peers, which is true. It is outperforming Chevron, which is true. However, a 10% premium on a company trading at a well below market average forward PE in addition to having a well above market dividend, is, first of all, not that much. Okay, the dividend is higher than Chevron's dividend. And second, doesn't even acknowledge the fact that Exxon could be, and arguably clearly is, a leader in the renewable transition, which is what is bringing the valuations down in the first place. Energy companies haven't had this level of free cash flow since 2014, when the price per barrel was over 100. We're at 84. These are backwards looking numbers. Last Q, 60s and 70s. This Q, 70s, 80s, and possibly 90s. Maybe even 100s. We'll kind of wait until next year for that. But 80s, 70s, 80s, 90s, average 80s. We should expect serious free cash flow. However, the stocks are well off those 2014 levels. However, the green transition was not a foreign concept in 2014. It may have been a little farther off, 6-7 years off. However, Exxon is well prepared for this. How are they prepared for this? Let me give you 2 deals that I think are more than enough to highlight how well prepared Exxon is for the green transition. They have developed, not are developing, have developed carbon neutral fuels in conjunction with Porsche, 911 Porsche, that are backwards compatible in all engines, all combustion traditional engines. This means your vintage sports cars can be used, and this means your Formula One cars can be used. There is an ongoing debate, and it remains to be settled, but people claim at higher speeds, combustion engines may perform better. And people like Elon Musk have claimed for certain use cases, combustion engines, at least for the foreseeable future, are better. For example, in planes and in rockets, which need, in his words, and maybe consult with an engineer to get a better, more accurate picture on this, but I will use his words. Not saying he's not an engineer, I'm talking from my ability to explain this. Propulsion. So combustion engines remain good for propulsion. Now, that is one deal, the Exxon Porsche deal. The second deal Exxon has done, of many, these are just 2 that I want to bring up to your point that I think are worthy of the 10% premium to peers in the industry, is something with Global Clean Energy Holdings. The ticker symbol for this company is GCEH. It trades over the counter, and I have a position. Have had a position for several months now. GCEH makes, like Porsche, fuels that can go in older engines. However, they make diesel fuels. Exxon has expanded their partnership through 2025 to purchase 5 million barrels of renewable diesel fuel from plants every year. It's an expansion of a previous deal. I believe previously it was at less than 1 million. This is the first step. Wait, why does this matter? Aren't we just going to go electric with trucks anyways? Tesla has the truck. Notice, truck's been in development for many years. We love Tesla. However, it probably won't be ready for the market for several more years. Why is this? Well, we're seeing one thing happen in the market, and that's a trucking issue. Why? It's not enough trucks. It's taking trucks time to get from place to place, to go back to place to place. If you throw charging into the mix, all of a sudden, you've got a mega battery, okay? Cars are long enough. You get a truck, 18-wheeler kind of truck, talking a mega battery. It's a long time to recharge. If time for truckers is an issue, you want to get in and out of that gas station as fast as possible. So, renewable diesel fuel, if we are looking to be as logical as possible, and have as positive an impact on our environment as possible, it's going to need something like renewable diesel fuel. So Exxon is very smart, and in my opinion, worthy of the 10% premium, given that focus on the renewable transition, the strong balance sheet, the very strong dividend, and the incredible cash flow, and expected continued rise in price in the price of oil. Obviously, that will also benefit peers, but for other reasons, as we have mentioned, we believe Exxon is worthy of our largest position. So we're taking the opposite end of that call. Of course, it needs two people to make a market, and we're happy to have these sellers out there with their sell ratings and their friends that tag along. However, it did not look like they had very strong company today. Exxon was down, but nothing crazy. Nothing crazy. Everyone knows Exxon is Exxon. So, that concludes energy discussions today. We're seeing weakness in our mining stocks. That's unfortunate. However, we don't think that's going to be long-lived. Cleveland Cliffs has had a massive run here. We're not liking them because they've had a massive run. We had them when they were down. However, the massive run comes on the heel of good earnings. I have yet to pin this drawdown on anything. If I had to guess, it's probably hold up around infrastructure. That seems like the most logical explanation to me. If you ask me, certainly a buying opportunity. We're looking at things like BHP. I would add to that. A stock we've discussed on this channel multiple times, Mosaic, down 10% today. What's happening there? That is a former very large position of ours. We did sell half of it in the 40s. However, we added to it today on earnings declines. We think today's earnings were pretty damn good. The thesis we had that this company would adjust for inflation, and you can find the thread that I posted about this stock if you go to Twitter and do a Twitter advanced search for the word $MOS, and then from @BillyLaBue on Twitter, you will find this thread. The thesis was, if you go to German hyperinflation periods, we're not saying we're getting into hyperinflation, but this is a period that we can study. What performed best were farms, because farms can adjust for inflation. People will buy food at basically any price. It's the most important product. Food has a necessary good to be produced, and that is fertilizer. Mosaic produces fertilizer. We are seeing Mosaic be able to adjust costs as expected for fertilizer. However, supply chain issues are limiting their ability to supply the demand. So the demand is there, the supply is struggling. The demand is so strong and prices are rising so well in their favor that customers are trying to buy out into Q2 of next year. So as far as I'm concerned, the Mosaic picture is quite strong, and this is a short-term issue, I believe. I believe supply chains will be worked out, and I don't think that's the cure-all for inflation. I think that is one aspect, maybe, but we still like Mosaic. Over here, we are not 10-year investors, okay? We're a little more active than that. We're trying to make sure we maximize the returns. We're buying on this dip of Mosaic and other stocks. We're not going to go through all the trades of today. If you have questions, feel free to ask me. Happy to answer anytime, all the time. And until next time, peace out.